Have you ever wondered how professional traders predict price moves before they happen? Well, the secret lies in the limit order book trading strategy. So, understanding the order book can give you an edge in the market, helping you spot liquidity zones, hidden market imbalances, and optimal trade entries. So in this video, we're just going to be breaking down everything you need to know about the limit order book and how to use it to improve your trading strategy. So stick around because this is a game changer for serious traders. And before we dive in, make sure to smash that like button and subscribe if you're serious about leveling up your trading game. First of all, let us break down what the limit order book actually is. In simple terms, the order book is a real-time list of all the buy and sell orders. So we have bid orders, we have ask orders, we have the order depth. All right, the order book is a real-time list of all the buy and sell orders. This is just an example, right? It's a real-time list of all the buy and sell orders placed by traders at different price levels. Okay, so this includes the bid orders. They are the buy orders. Okay, the bid orders are the buy orders. All right, showing the prices that traders are willing to pay. Okay, and then we have the ask orders. They are the sell orders. Ask orders are also called sell orders. They are showing the prices at which traders want to sell. All right, then we also have the order depth, which tells us how much liquidity is available at different price levels. Okay, now why is this important? Because by analyzing the order book, you can identify key liquidity zones, potential price reversals, and market trends before they happen. So this allows you to position your trades with precision. All right, now that you know what the order book is, let us talk about how to use it effectively in your trading strategy. Now, there are four main ways traders leverage the order book. All right, there are four main ways that traders leverage the order book. The first is identifying liquidity zones. Large clusters of buy and sell orders create support and resistance levels. So if you have a high number of buy orders at a specific price, it often acts as a floor for the market. Conversely, a large number of sell orders create a ceiling. So it's important for you to take note of these, all right, because it can help you when you want to make your trade decisions. Also, watch for absorption. Absorption happens when big market players keep buying or selling at the same price level without the price moving significantly. So this can be a strong indication that a breakout or reversal is about to happen. Also, you can use this to spot fake orders called spoofing. Some traders place large fake orders to manipulate price movements. If you notice big orders suddenly appearing and disappearing, this could be an attempt to mislead other traders. Be cautious and watch for confirmation before making a move. All right. Now, it's important to understand order flow and market imbalance. If bid orders or the buy orders are much larger than the ask orders, or that is the sell orders, it often means that there is upward pressure on price. The opposite is true if sellers dominate the book. So expect downward movement in that case. Okay. Now, here are some final tips to maximize your success using the limit order book strategy. 1, try to combine your order book analysis with technical indicators. Now, it is one thing for you to understand how to use your order books, right? And it's another thing to actually execute trades. All right, it's another thing to actually execute trades. Okay, so once you have gotten the relevant data that you need from your order book, it's important to also pay attention to the technical analysis on your chart, because the order book works best when combined with some technical indicators. For example, VWAP, moving averages, RSI, just for additional confirmation. Okay, and also try to trade high liquidity assets. All right, trade high liquidity assets. You can focus on major forex pairs like the Euro USD, GBP USD, or popular stocks, maybe stock indices and all of that, where order book depth is higher. And also avoid trading in low volume periods, okay? Because thin order books lead to high slippage and unpredictable movements. Okay, so for your own good, stick to active market hours for better execution. All right, so if you apply these techniques, then you could start seeing the market through the eyes of professionals, and that is going to give you an undeniable edge in the market. Okay, so it's important to take note of these things. They're gonna be additional help, okay, in your trading strategy. Meanwhile, irrespective of the strategy that you were using, I just need to drop a quick note on risk management. All right, because risk management is very necessary in every strategy. Even when you are trying to implement the limit order book strategy, getting information from other books and taking advantage of those information for your trading style, ensure that you do not risk more than you can afford to lose. Ensure that you observe good risk to reward ratios when you want to execute the trades. Ensure that you do not risk more than 2% of your account balance in a single trade. It is not advisable to do that. It's not advisable to risk more than 2% of your account balance in a single trade. And then you make sure that even if you are risking 2% of your account balance, then your target should be at least 4%. That is a risk to reward ratio of 1:2. So if you are risking 1% of your account in a trade, that trade you should be targeting at least 2% of your account. If you're risking 10 pips, for example, you should be targeting 20 pips. If you're risking 20 pips, you should be targeting 40 pips. If you're risking 40 pips, you should be targeting 80 pips for your take profits. All right, so basically risk to reward ratios are very important if you want to have a successful trading in the long run. Okay, so that is it for this breakdown of the limit order book trading strategy. Now you have the knowledge to spot liquidity zones that you detect market imbalances and place trades with confidence. So if you found this video helpful, make sure to hit that like button and subscribe for more expert trading content. All right, drop a comment below if you have any questions, and I look forward to seeing you in the next video. All right, thank you for watching and happy trading.